Let's see how the arbitrage process is carried out when the value of unlevered firm is greater than value of levered firm. Illustration 9. Following data is available in respect of two companies having same business risk. Capital employed 2 lakh, earnings before interest and tax 30,000. Sources: levered company and unlevered company. Levered company, the debt at the rate of 10% is 1 lakh, unlevered firm it is nil. Equity is 1 lakh in levered company and 2 lakh in unlevered company. Equity capitalization rate KE is 20% and 12.5%. An investor is holding 15% shares in unlevered company. Calculate the increase in annual earnings of investor if he switches his holdings from unlevered firm to levered firm. So first we need to find the total value of the firm in both levered company and unlevered company. Let's see. So, levered firm and unlevered firm. Earnings before interest and tax is given in the question. It is 30,000 for both levered and unlevered firm. Now, we need to reduce the interest from earnings before interest and tax. The interest in levered firm is 1 lakh into 10% because the debt here is 1 lakh in levered firm at 10%. So the interest is 1 lakh into 10%, 10,000, and in unlevered firm it is nil. So we will get the earnings available to equity shareholders, that is net income. 30,000 minus 10,000 gives 20,000, and here it is 30,000 itself. So earnings available to equity shareholders divided by equity capitalization rate will give the market value of equity. So equity capitalization rate is also given in the question, that is 20% and 12.5%. So we write 20% and 12.5% here. So when we divide the net income divided by equity capitalization rate, we will get the market value of equity. 20,000 by 20%, that is 1 lakh, and 30,000 divided by 12.5%, we get 2,40,000. Now the market, we will add market value of debt. Market value of debt is 1 lakh and here it is nil. So 1 lakh and nil. So we will get the total value of the firm by adding market value of equity plus market value of debt. That is 1 lakh plus 1 lakh. Here levered firm it is 2 lakh total value of the firm, and in unlevered firm it is 2,40,000. So we get the total value of the firm in levered firm and unlevered firm. In levered firm it is 2 lakh and in unlevered firm it is 2,40,000. Now we can clearly see that the value of the unlevered firm is greater than the value of levered firm. So now say, when the value of unlevered firm is greater than value of levered firm, how the arbitrage process will be carried out? We will sell our 15% shares in unlevered firm and buy both shares and debentures from levered firm. Since we are buying from levered, we will buy not only the shares but also the debentures from the levered firm. This point needs to be kept in mind. So we hold 15% shares, right? 15% shares in unlevered firm is what we are holding. So we will sell that 15% shares in unlevered firm and buy shares and debentures from levered firm. So what is our present earnings from unlevered firm? We are now holding 15% shares in unlevered firm, right? So what is our present earnings from unlevered firm? Unlevered firm earnings available to equity shareholders is 30,000 and we are holding 15%. So earnings from unlevered firm is 30,000 into 50%, that is 30,000 into 50%, that is 4,500. That is our present earnings from unlevered firm. Now we will sell our 15% shares in unlevered firm, right? So what is the total value of unlevered firm? 2,40,000. 2,40,000 into 50%, 36,000 is what we will get when we sell our shares in unlevered firm. So we have an earnings of 36,000 to buy what? To buy shares and debentures from levered firm. So how will we divide the amount between shares and debentures to buy from levered firm? How will we divide the 36,000? We will divide it in the ratio of the equity and debentures in the levered firm. How weight of equity and debentures in the levered firm. So we will divide it in this ratio. Let's see. buy shares in levered firm. That is, we have 36,000 and we need to divide it in the ratio of the shares in levered firm. So total it is 1 lakh plus 1 lakh, 2 lakh, right? And the equity it is 1 lakh. So 36,000 into 1 lakh divided by 2 lakh. We will buy shares in levered firm for 18,000 rupees, and buy debentures in levered firm, that is 36,000 into how many debt is the 1 lakh. So 1 lakh divided by 2 lakh, that is for 18,000 we will buy debentures and for 18,000 we will buy shares. This 18,000 is how much of the total shares in levered firm? In levered firm there is total 1 lakh shares, right? And among that 18,000 we will buy. So 18,000 divided by 1 lakh, it is 18% of total shares. This we are buying 18% of total shares and we are buying debentures for 18,000 at the rate of 10%. So now we see the incremental income we will get through arbitrage process. Earnings from shares in levered firm. Now we are holding 18% shares in levered firm and also 18,000 debentures from levered firm at 10%. Now let's see the earnings. Earnings from shares in levered firm is equal to earnings available to equity shareholders in levered firm is what? 20,000, right? And the 20,000 we are holding 18% shares. So 20,000 into 18%, 3,600 is our earnings from shares. Now we are also holding debentures for 18,000 at 10% rate, right? So earnings from debenture interest is 18,000 into 10%, 1,800. So our total earnings from levered firm is 3,600 plus 1,800 is 5,400. Now, what was our previously earned income from unlevered firm? Previously, we earned an income of how much? Previously earned income from unlevered firm is 4,500, right? So let's reduce the previously earned income from unlevered from 4,500. So the incremental income is 900. Now presently we are because of arbitrage process we are getting 5,400 from levered firm. Previously from unlevered firm we get 4,500. When we subtract both this, we will get the incremental income due to arbitrage 900. Hope it is clear.